Hello everyone, welcome to my YouTube channel. In this particular video, let us solve one more problem related to impairment loss. XYZ company has a machine costing 6,75,000 with 5 years life and 2,70,000 in accumulated depreciation. So in accumulated depreciation, how much amount is there? 2,70,000. The selling price of a similar machine. Suppose if that machine is sold, then the similar machine, the selling price will be 3,20,000 rupees. The asset is expected to generate rupees 1,50,000 cash flow every year at 10% discounting factor. So the discounting factor is 10%. Calculate impairment loss after 2 years. The impairment loss is tested. So they are testing the impairment loss after 2 years. Write the journal entry. What is the journal entry if 2 lakh rupees is there in revaluation surplus account? So two types of journal entry you have to write. One entry you have to write for impairment loss. Second entry you have to write if in surplus revaluation surplus account, if 2 lakh rupees is there, then what will be the journal entry? So first let us calculate the impairment loss. In order to calculate the impairment loss, the formula is carrying value minus recoverable value. First we will find out the carrying value. The formula to find out the carrying value is cost minus depreciation. So the cost of the asset they have given in the question, it is 6,75,000. Depreciation, they have told in the question that 2,70,000 is in the accumulated depreciation account. So I will write that 2,70,000 here. So 6,75,000 minus 2,70,000 will be 4,05,000 rupees. 4,05,000 rupees is the carrying value. Now I need to find out the recoverable value. In order to find out the recoverable value, we have to do a comparison between fair value less cost of disposal and value in use. So fair value, they have given in the question that the selling price of a similar machine, the similar asset, is 3,20,000 rupees. So that is fair value. And value in use we have to find out. So what they have told in the question that every year the asset will give a cash inflow of 1,50,000. So I'll write 1,50,000, 1,50,000 for all the 5 years. Discounting factor we have to find out. It is for 10%. In my previous part video, I have told how to calculate the discounting factor. You can go through that video to find out the discounting factor. So for the first year, the discounting factor is 0.91. Second year, it is 0.83. Third year, it is 0.75. Fourth year, it is 0.68. And fifth year, it is 0.62. So if you multiply the cash flow with the discounting factor, we will get the present value of the cash flow. So now we are testing the asset after 2 years. So first year's cash flow and second year's cash flow you ignore. The remaining 3 years cash flow should be added. So when you add 1,12,500 plus 1,02,500 plus 93,000, you will get 3,07,500. That is the value in use, 3,07,500. Out of this, whichever is higher, which is higher, 3,20,000 is higher. Hence, recoverable value is 3,20,000, carrying value is 4,05,000. Now, in order to get the impairment loss, we have to subtract carrying value minus recoverable value. Carrying value is 4,05,000. Recoverable value is 3,20,000. If you subtract both, you will get 85,000. So 85,000 is the impairment loss. So for that, journal entry is impairment loss account data to PPE account. 85,000 in debit column and 85,000 in the credit column. Suppose they have told that if revaluation surplus is there of 2 lakh rupees. So when any revaluation surplus balance is there, then we will use that revaluation surplus balance to write off the impairment loss. So for that also we have a journal entry, revaluation surplus account debit to PPE account. So 85,000 and 85,000. So here we will not write impairment loss account because in revaluation surplus account there is a balance. So we will use that balance to write off the loss.